Hello, 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 everyone. Happy Thursday. How is everyone doing? Hey, Sterling putting in the jobless claims numbers. Thank you for and all the other news. How you doing today, Sterling? Good morning, Martinez. Good morning, Patrick. Overreaction, higher for longer has been the mantra, but the key thing was the dot plots. The key thing, I mean, we still have potential for one more hike, but that wasn't surprising. The key thing was the way they changed the dot plots. That is what the market's sort of freaking out of. That was a pretty big jump. Good morning, Alan. Okay, Jacob. So let's see. If you don't know, and you can always look at the dot plots in the Federal Reserve, they release the meeting minute summary. Here's the key thing. So for 2024. So you see the people for 2023 right here. If everybody can see this, you see how we have some people just holding. I think there's 7 holding, and then the rest voting for one more potential increase or thinking there'll be one more increase. But then look at it for next year. If you take the median here, you're still right around this, slightly around 5%. Okay, so this has jumped substantially. Okay, so if you average out all this, I think it's at like 5.125 because you got somebody very, very hawkish still up here. But that would mean only if they do hike, we could get 2 rate cuts next year that would only take it back potentially to 5%. So that's higher for longer. And then the longer run, they way out, they have still you still for 2026 you could be above 3%. So that's what's key. If you're looking for this, it's on the federalreserve.gov website. They release it every one, but it's not just the dot plots, by the way. It's, you can look at, it's super fun reading. It's all their economic projections, everything else. But I just wanted to point out that's what the market's freaking out about, the higher for longer, not just with the current things, but less cuts expected in at least 2024. So that's what's got the market going. All right. And that's going to hit tech really hard. Morning. Now, Amazon and Nvidia weekly double tops. If we have a chance, we'll look at them. Good morning, Anissa. Last time 10-year notes were at this level was a week of October 15, 2007. This is not good. They're going to get interesting. Now, from let me just get through. The jobless claims were actually strong this morning. So forecast 222K, consensus 225K, actual 221 previous. So big drop there. Continuous jobless claims coming in better. So that's those came down. Now Philly new orders, big plummet on Philly Fed new orders. Employment still in the dumpster, and the big thing with Philly Fed, this is sort of interesting. Prices paid. Look at this. Prior 20.8, big jump, 25.7. So you have poor employment based off Philly Fed. You have a continuing jump in prices. This is very stagflationary. I mean, it's a regional index, but it's stagflationary. What else do we have today? Existing home sales. CB leading index, we'll have to still see if this is in the dumpster. Anything below 0 is still in contraction, and it's been in contraction. I forgot how many months at this point, but it's rolled over a long time ago. So S&P 500 map, you see tech and mega caps and stuff that's been running up the most. Taking it in the shorts today. Energy with oil holding up, still hitting the rotation zone on the daily and rotating back up. Your groups, only thing barely positive is energy. Everything else is negative. Fed watch. So there's no hikes priced in yet. But you see the pause now extended into June, and then 2 cuts. If they hike again, this would only take it down to 475 to 5 if they don't hike again. And this is consistent with potentially 2 cuts at the end of next year or the later half of next year. But if they hike again, you're looking 2 cuts would just take it to 525. One 25 basis points below where we are now. Fear and greed, based off yesterday's close, is neutral. I'm expecting this to open in the fear mode this morning. So we're back down there. FedEx was a beat on EPS, but a miss on revenue is gapping up. And then there's nothing. There is nothing. There's no point in harping on that. I actually have a very busy morning. A bunch of stuff came up. I was going to cancel the live stream, but I figured with this market action, had to get one out there. So, you blowed your account up yesterday trying to buy the dip. Well, you should always be trading with position size and stops. Remember, the only thing yesterday that I said, what I was watching, was if we broke above the Tuesday's high and then followed through with a close. We did not even get to Tuesday's high in the S&P. And then, remember, Fed, we got some major momentum. Little bounce, roll over, pausing bar, and then down. That's why you always trade with stops, because you don't know what's going to work. You should never blow up your account on 1 or 2 trades. Never. You should be able to withstand, you should be fractional sizing and position sizing, so as you hit a losing streak, you're reducing your size. That's why we teach to base it off a percentage of your remaining count. And so if your count's going down, your trade size is getting smaller. And that enables you to withstand losing streaks. Now, the doubles are off the table. The S&P one hit the first target, and then yesterday closed below the invalidation point or the stop point. So that only hit the first target and then rolled over. That's why there are losing trades. It's part of trading. You got to put the probabilities in your favor, though. If you knew which ones were going to lose before you went in, you'd never take a losing trade, which is never going to happen. So right now, this is interesting because now we're into a longer term. You can see the weeklies, longer term flagging pattern. We're actually below the lowest weekly close at this point, which was mid-August. If we close the week down here, that has very bearish implications on any rally. So we're going to be watching. And I have the flagging pattern set up. If we take out the 4,400 lows, 43.63 area, 43.28 are the next key areas. All right. And that would be consistent with the unfolding of this big flag pattern. And then I'd be watching for a bounce and another rollover play. If we close with new below the mid-August lows, that is yet to be seen. We still have today and tomorrow trading. On any rally, we've had some pretty substantial weakness this morning. But if you see 44.28, 44.30 area is now very key resistance, also coming in right about the 12.5% harmonic. Above there, 44.51. 44.51. Any bounce, I'm keeping a close eye first on the 1 hour rotation zone and then the 4 hour catching up with any if we do pause down here. So those are the rotation zones I am watching. NASDAQ, the double, which did not hit the first target, is also off the table. It's a little sloppy here. Let me take off this other channel, clean up this chart a bit. I got to change some colors of some lines here. Hold on. Not trying to make this over busy. I'll get to comments in a second. But we're hitting the 87.5 from the run-up on the lows of Friday the 18th to Friday the 1st of September. We've pretty much tapped on that 87.5 after closing below the 62.5 yesterday. So, what next? Let me again clean up some of this. If we're coming into a very key closing support basis, so this is the close from Friday the 18th, which was the long-legged doji right here, about 14,945. We break below that, 14,804, 14,622. Now, I'm not expecting that today, but that's the longer term, and you can see also the channeling downward pattern here. To the upside, based off where we sit now, Again, I'm watching the 1 and the 4 hour, but on any run up, I'm paying attention to about 15,050 area for the first level of key resistance. The Dow briefly spiking above yesterday's high briefly spiking above Tuesday's highs, has been rolling over with Powell retesting the 200. The 200 is very key right here. We start getting especially close below that, substantially below that, 34,380, and then it's uh-oh mode for the Dow. Resistance 34,6, and then 34,780 to 34,800. Looking if we project something down. If we do break below, not necessarily for today, but I'll be watching for rollover plays below Friday the 25th, 34,160, 34,950 area are the next key things lower. Let's see. Good morning, options 22. Weekly double top in SMH. There hasn't been a soft landing without a recession. We're not going to have a soft landing. Magnificent 7 potential double. Hey, you guys are good. Everybody's getting so good. Is the weekly on NVIDIA a valid double top? We'll take a look at all this real quick. Let's just get through this. Again, on any bounces, pay attention to the shorter term rotation zones. We just hit, coming back down to, this actually hit faster than I thought it would. Remember, I put up these harmonic levels. Yesterday, we closed below 1830, and today we've already tapped off that 1809, a pretty key cluster. We also closed below the 62.5. So the Russell, the next major level is 1777. So any rallies, we'll be watching for the rollover play also in the Russell. The short-term resistance is about 1823. More significance is about 1825. Let's just get through some stuff also. But we should easily see the lows from March in Russell over the next few, or at least possibly the next couple weeks before this gets over. VIX, remember 1481 was key. We closed above it yesterday. We're into the double bottom territory, so it'll be interesting to see if this closes above 1569 today. And if the sell-off continues, if we actually go and reconnect with the 200. The 200 was the key topping area last time. So that's going to be interesting to see if we trigger or we get some kind of reversal in the VIX today. The DAX testing the lows, breaking through all the buying pressure. So we're going to be interested. I'm watching where the DAX closes today to see if it closes below 15,780. Notes rolling over. They tried to hold up yesterday, and then this morning it was not buying it. This morning was not buying it. Coming back down through the next minor harmonic. Let's go straight to yield. So on any still, we don't have a bottoming play. I'll be watching for rollover plays there. But the yield, look at that yield. Through the minor harmonics, the double, potential double, because it never even came close to triggering, is off the table now. Stalling out at the bigger harmonics from the projections back here. Let me correct this a little. Let me correct this a little. There we go. So you see stalling out right here. Next major target, if this keeps climbing, is 4.63. The 2 years also climbing. Yesterday we got a decline, but now a little bear steepening today, but still caught in this range down here. So no major bear steepening. Dollar index still retreating a bit, but pushing higher overall. The bottom of the daily rotation zone is 104.20 right now. The top is about 104.85. So the dollar just chugging along higher against very key resistance. But if this takes a pause, it's been chipping away at this resistance area. If that breaks through, the dollar could start another significant run coming up. Crude, back to the rotation zone and rotating up today. So let's keep an eye on crude and see how much this bounce can take. If you're looking at stuff shorter term, here's where I take the high to low of this and watch to see how it right now is between the 50 and the 62. See if it closes above pretty much 90, 95. Little tip there. Sorry, I'm rushing this morning. Gold, big reversal yesterday or today, sorry. Gold reversal, big reversal today. Probably going to take the double off the table, but still an overall consolidation. Yen pausing at key support. Euro, little double bottom pattern. That's the only thing that gets me a little more bearish. If this triggers, not necessarily today, of course, but going into next week, if that triggers, I'd watch for the slightly bigger pullback in the dollar, and the euro could retest the area of the 200 daily SMH. Pound, nothing. Pound still weak. This we'll be watching. It broke through the key support from back in May. Pound, I'll be watching for a bounce play, but then another rollover. Eventually, I'm expecting the pound to get back to 117. Longer term now, other markets, Tesla, with that double, we had the little run up, and I said where the stop level was on the closing basis, 274.34, or the trade through basis, 275.89. Neither of those levels were hit. We did not close above 274.34, and we rotated back down. 254.81 is the final target. 256.44. We're going to gap below the second target. So that's where that sits right now. So it's lowering the stop on the Tesla. Nvidia rotating down again yesterday, 412. Next target's 417, then 406. Spiders and the Qs. The spiders closed below the 62.5 yesterday, after hitting the first two targets, taking the final target off. The next key target area was the 435.59, which is the 87.5 because it closed below the 62.5, and we're going to open below that this morning. And that's some pretty key resistance. If we do break below that, 433 is the next target area. Okay? So do keep that in mind. On any rally, I'll pay attention to this is interesting, to about 436.90 to 437, and then the prior day's close, 438.64. Other than that, I'd have to use short-term intraday harmonics or any very short-term bottoming pattern that's formed intraday. From the Qs, the first target being hit on the double, closing right at the 62.5 yesterday. I don't know, did it close below it? I didn't check the Qs officially like I did the futures. 364.51, 364.54. So that technically closed above it, but with the gap below here and the move below the 75 takes the double off the table. Next key target, if it does head lower, is 357.98. So 358, but I'd be watching closer to 358.58 before then. Right now, 364.24 would be your key resistance. You get through there, we're at 364.50. What else do we want to look at? Yeah, the 30-year yields at, yep, it's interesting. Yeah, there we go. You wait, you see what happens with mortgage rates again. I'll take a break. This market is really crazy and makes you stressful. Then take a break. It will always be here. The NASDAQ, we'll take a look with the back adjusted on. And then what other things you want me to look at? SMH, and then I got to run. We're going to have to do some more tomorrow. Did it hit that, Sterling? I can't see. Let me see. With back adjusted on, I don't have it hitting the 75. Even with back adjusted on. Maybe I'm missing something. I'll have to take a look at that more later. SMH weekly. Let me take off these old levels. The SMH on the weekly does have a valid double. So it needs a close below 143.35 on a weekly basis. And if that happens, look at that clear path move. The second target's right in front of the breakdown zone. So we could easily see a major rollover longer term. So that's very good to watch. I know we had, what, Amazon looks like that's a weekly double. So Amazon could be another weekly double that would trigger if it closes below 130.58. So keep an eye on that. Right now it's trading into some key support, some very key support area, but 130.58 is going to be key. What else? What else was I supposed to look at? What else? Sorry, just trying to look, because sometimes even if you don't trade stocks or whatever, looking at stuff gives you a better semblance of what is going on. I'm just trying to scroll back through the chat. If I missed it, oh, Nvidia, we looked at that. We looked at Amazon. I'm just trying to make sure I didn't miss anything. Sorry for rushing today. Some things it has nothing to do with trading. It's personal family issues. So, yeah, we looked at Amazon. Let's just peek at some other things. Apple, we had a little mini double, which is now pretty much off the table. So really pay attention. Apple, I don't think this falls into a weekly double. No, it doesn't. But if this starts, watch where it closes this week in relation to about 174.50. If that does close below there, I'm watching for any bounces will be rollover plays. By the way, Meta still has not invalidated after hitting the first target. The Meta is still in play for the double. It's not looking good, but the stop level on Meta is 288.81 on a closing basis. Okay? So that's another one that hit the first target, and that's why we have the first target. Because if these things are going to fail, that's the most likely area they're going to fail. So what you want to do if they're going to fail there, you at least want to have your stop raised. All right, and then I thought I got NVIDIA, didn't I? NVIDIA's going to, it's hit opening below the second target today. And then the final target's 406. NVIDIA, does this have a bigger double? Does this have a bigger double? Nope. No bigger double there, but if NVIDIA closes below 402, below 402, I'm sorry, 403.11, watch out. It would be a close below the rotation zone and below this. And where would that take us in the bigger perspective? Let's see. Whew. That's right at the 25% harmonic too. The next key level will be 354, then potentially back to 305 to 256 longer term. So that could get interesting. And when I mean longer term, it could take 6 months or more. All right, that's where we sit. Yeah, everybody, careful trading is not unheard of for the day after MOC to reverse violently. We could get some reversal. That's why I'll watch for momentum bars. And also if the VIX starts dropping aggressively below this 1570, I'll watch for a continued bounce before the next rollover. All right, everyone. I will be back tomorrow morning. Thank you for tuning in. Bye for now.